Hi, I'm Roger Michalski, publisher of Eagle Financial Publications here in Washington, D.C. I'm here with Brian Perry, the editor of the Cash Machine newsletter. Brian is an expert on income investing. And today we're going to talk about a topic on income investing that everybody is a little bit familiar with, but they don't know a whole lot about. That's selling covered calls. So Brian, tell us a little bit about that.
Well, selling covered calls is the business of selling risk back to the market, okay? And we all know how volatile the market can be from time to time, and yet we hear about option trading and maybe how complex it might be, but selling risk is what professionals do, and making it easy enough for even the most novice of retail investors is really a great experience to understand and to put to work. So what I find it to be most intriguing is that it's not very hard, it's very lucrative, and you get paid right away. And those are the three really great components about selling covered calls. Really, if you got any kind of an ordinary stock portfolio, you can put this to work tomorrow and be done with it in a very short period of time, once a month, and it makes for enhanced income that is exponential in terms of dividend income or other types of income that it would be competing with.
So if you had a portfolio of about $50,000, how much income could you get in a month?
Sure, I would say that a well-executed covered call program, Roger, will generate somewhere between 3 to 4.5%, 5% per month. Okay, which in dollar terms, that's roughly between $1,500 and $3,000 a month. Okay, if we annualize that over the course of the year, on a cash income basis alone, that approaches or right is around the 40% benchmark of income, which is staggering by most people's estimates. But if you compound it, even you're getting upwards of 50%. If in fact you are in what I would consider to be a market that's not going through a ton of upheaval, but offers good volatility to it. So that is the real intrigue behind selling covered calls in a manner that, if executed properly, can be extremely lucrative to investors that exploit this method.
So you're going to get $1,500, maybe $3,000 a month, but how much is it going to cost you?
Well, thankfully, we're in the world now of online brokerage firms and also discount rates. So typically, it's going to cost most people between $2 and $10 to run a stock trade of somewhere between 100 and 1,000 shares. And for every call option that represents 100 shares of stock, that's going to run somewhere between, again, $2 and maybe $10 to $12 per trade, depending on where you do your business. It's a very competitive landscape out there, though. So let's say it's going to cost you maybe 1% to 2%, 3% tops on the outside to manage this portfolio on a year-round basis. That's dirt cheap compared to the kind of income that you're generating.
Yeah, so great. So it's a low-cost way to generate a couple $1,000s of income every single month. And there's a lot of other areas of covered call strategy that we'll get into in the upcoming videos. So stay tuned for the whole series. We're going to have a whole bunch of videos for you, and Brian's going to walk you through different steps of a covered call strategy. So until the next video, this is Roger Michalski. Have a great day.